there, my name is Andy and welcome to my channel about crypto. In today's video I want to talk about what in my opinion is the best, the safest and most effective strategy when it comes to investing in Bitcoin and some other cryptocurrencies. It may not necessarily apply to the most volatile cryptocurrencies, so like really small cap altcoins, but when it comes to Bitcoin, Ethereum and some of the other large cap altcoins, I think it works really well. As always, if you find those videos helpful, please hit the like button, subscribe to the channel. If you have any comments, please put them in the comment section or join my Discord and we can have a chat about it then. And if you find this content overall helpful and you are relatively new to crypto and you would like to explore it more, please do check out my upcoming course, Crypto Like a Pro. You can find a link to that in the description as well. So when it comes to investing in crypto, everyone or most people, especially when they first start, they ideally would like to time the perfect bottom to put their money in, and then time the perfect top to cash out. So if we look at recent changes in Bitcoin price, well, that would be buying Bitcoin at around $3,000 or $4,000 and then cashing out just shy of $70,000. Right now, we are in an overall crypto downtrend. And recently Bitcoin hit around $17,500. Currently it's trading around 22,000. So of course, a lot of people are probably thinking, well, is now a good time to buy, or should I wait when it dips again to 17K? Will it go down even lower? And so on. And then same thing happens when we start getting closer to the top. Is 60K good price to sell? 65, 70? A lot of people, myself including, didn't really sell much or any of their Bitcoin because we were expecting that it will hit around 100K in this market cycle. Some people were expecting it will hit like 300K, which was a bit unrealistic. But 100K, 120K was definitely possible, and I think it would be achievable if the overall situation worldwide was slightly different. So a lot of people didn't sell anything at 70K because, well, they thought that they are still 30K short of what Bitcoin will reach in this market cycle. And if you keep following that strategy, trying to time the perfect top and perfect bottom, well, the risk is that you will either never buy anything because you'll be always waiting for a better price, or you never sell anything and never take any profit out because, again, you're always waiting for a better price to achieve. And also this type of trading is very prone to, well, essentially trading your emotions and being affected by what other people are saying, because you probably won't be relying purely on your gut feeling or your own experience when to buy and when to sell. You'll be looking at what people are saying on crypto Twitter, what's happening, I don't know, what various YouTubers are saying and so on. And when the prices are going down, you will find that a lot of people are saying that, oh, Bitcoin is going down to 10K or Bitcoin is dead and it will never recover. So of course, even though the price may be already quite attractive, you may still actually hold on with buying because you think, oh, it will go down even lower. Or maybe this time it will crash completely and it's better not to risk it at all and wait until it starts going back up. Same thing happens when the price goes up. Everyone is screaming that Bitcoin is going to hit 100K or 200K or whatever. So suddenly 70K doesn't seem like such a good result because you still expect at least another 30, if not 50% more. And the reality is that this is how most people get wrecked. This is how they miss either buying opportunities or selling opportunities or both. So how can you do it differently? Well, the easiest strategy, the least stressful strategy when it comes to investing in crypto is DCA, dollar cost averaging, which basically means that let's say you have $1,000 you want to invest in Bitcoin. Rather than trying to time the bottom perfectly, you invest, for example, $100 once a week. This way you probably never hit the perfect bottom or the perfect top, but overall your purchase price and then doing the same thing at the top and selling rather than just at 100K as you approach to 100K means that, well, your average purchase and sale price is still pretty good and you actually get first into the market and start buying, and then on the other side when the market goes up, you actually sell and take some profit out. Because if you think about it, if you're hoping that Bitcoin will reach 100K, well, what would you do if the price gets up to 95 or 98,000? There's a good chance that a lot of people are expecting 100K Bitcoin. So a lot of people will be selling just before, especially big institutions or people who have a lot of money invested in it, because they know that the moment we hit 100K, it will probably dip. So what if we never actually get to 100K? It's purely theoretical. I think we will eventually. But essentially imagine a scenario where the next peak, let's say it's 98,000, and you never sold anything because it was just $2,000 shy of 100K. When in fact, you could quite easily start selling at, I don't know, 60, 70, 80K, maybe even 90K in smaller chunks. And then, yeah, maybe you would still have a bit left at the end because, of course, you were waiting to sell that at 100K and that never happened. But you sold quite a fair bit on the way up and you secured quite a bit of profit. If we look at the chart, we are currently in a perfect scenario to explain this concept, because for the last month or so, Bitcoin's been just sort of going up and down and not really doing that much. On average, we're trading around 20K. Right now, we are pushing towards 22K. The bottom, which is actually so far the bottom of this market cycle, was around 17.5, depending which exchange you look at. So right now, probably a lot of people are thinking that, well, I want to wait for Bitcoin to get back to that 17.5K level before I buy, rather than buying it now at around 22K. And sure, you can do it. First of all, I do hope that if you're aiming to buy the bottom and sell the top, you are using buy and sell orders on exchange rather than trying to do it manually, because if you do it manually, there's pretty good chance that you will be asleep or at work or something else and you miss that opportunity. If you're not sure how to set buy and sell orders, you can check out one of my other videos. I'll put a link at the end. But if you try to wait for that bottom again, well, we are at the stage where there is a possibility that this was actually the market bottom, and it's not completely unrealistic for Bitcoin to do maybe something like this and basically just start going up. And the problem is that if this happens, there's pretty good chance that you will not notice it for weeks, if not even months, that actually we are now in an uptrend. I mean, okay, we have 200-week SMA here, which if we go above it and keep it as a support, then that's a bit of an indication that we may be actually on the way up, but it's by no means guaranteed. It's quite easy on a shorter time frames to miss those changes in trend because it may not necessarily be very obvious. And then basically, if you are currently waiting for Bitcoin to hit back 17K or so, well, you will probably never buy it because it may dip, let's say, to 20K, but well, that's 20K, that's still way too high price. Then it goes up to, I don't know, let's say 22K or 24 or whatever. Well, that's even higher, then dips to about 22. Well, no, that's still not right. And then it sort of keeps going back up further and further away from the price per where you wanted to buy. And then eventually you just capitulate and you say, oh, whatever price it is now, I will buy it. And let's say you buy somewhere here around 25 or 28K or something like that. And of course, lose on quite a bit of an buying opportunity here. Or you just never buy it because you just get frustrated and annoyed with yourself that you missed out on the opportunity. Of course, the other option is that the opposite may happen. So what may happen is that Bitcoin now gets rejected from 200-week SMA, which is quite possible, dips down, then maybe goes back up again, and then crashes down quite a bit lower. Kind of, actually, if we look at it, and something I mentioned on my Twitter a few days ago, something similar to what we've seen here. I mean, this pattern right here, it's not too dissimilar from what we are seeing here. So you could speculate that we are due for a drop like this one. So, okay, something like this may happen. And then, of course, yes, you may have some really good buying opportunity here. But again, we may bounce back at, let's say, 18K. And what if that's the bottom? So what actually if this was the market bottom and then we just approach it but never quite reach it and then go back up? Again, you're missing out on that buying opportunity. With DCA, there is no such risk. You just keep buying in smaller chunks over a set period of time. And regardless of the price, you just keep buying. When essentially all you need to know is whether, broadly speaking, we are in a downtrend or uptrend. If the prices keep going down or are at relatively low level, 20K Bitcoin is certainly not a bad price to buy at. then you just simply carry on buying. If the prices start skyrocketing, well, that may be the time to sell or hold. For example, if we look at ETH right now, it just had this really nice move up to around, well, over 16K. Over 1600. I wouldn't touch ETH with a barge pole right now. And it's not because 1500 ETH is a bad price. I think it will go up to around 10K in the next market cycle. And a couple of weeks ago, I was perfectly happy to buy it at around 15K. And a few weeks ago, I was perfectly happy to buy it at 1500. But it's a difference between buying in a downtrend like this or buying at the peak of an uptrend like this one. In a downtrend like this, you know that, well, you may not be getting the best possible price, but you are getting a decent price. When the price starts going up like this, essentially 50% in 7 days or so, well, there is a very good chance we'll have a bit of a pullback. And so far today, we have quite a solid red candle. I don't know if it will stay red or not, but there's pretty good chance that the price will dip a little bit. So of course, something like this would make me then think, okay, I will probably hold on a couple of days and then see what happens. But broadly speaking, I think DCA is a really effective strategy when it comes to both buying and selling. It takes out a lot of stress out of the equation. It means that you don't have to constantly looking at the chart and tracking the news and checking what's happening with the market. Essentially, you just keep buying. Your average purchase price, if you kept buying during this whole period, would be probably around 20K, because that's roughly the average of all those candles. Of course, it's possible that you are unlucky and you hit those peaks. But then if you believe that Bitcoin will go up to 100K or above in the next market cycle, well, it doesn't really make that much of a difference whether you buy at 20K or 17 or 22. It's all relatively similar price. And it's much more important that you actually get into it, that you actually buy something so you can take advantage of it rather than just keep waiting and not take any action. So I think that's all that I wanted to say in this video. And when it comes to DCAing in and out of your positions, well, you can do it automatically on many exchanges. You can just simply set your automatic purchase of, let's say, I don't know, $50 or $100 every Monday or every month or whatever. You can do it manually in set intervals if you prefer to see what exactly is happening in the market and maybe adjust it by a day or two. And then, of course, you can also combine it with setting buy and sell orders on exchanges. So if there is a sudden dip, like this one here, for example, well, your order can still get executed and you can still take advantage of that. So let's say, again, if we look at our scenario where you have $1,000 to invest, you may aim to put $100 every week into Bitcoin, but there's also nothing stopping you from setting, let's say, $200 buy order if price of Bitcoin goes down to 18.5K, or $500 buy order if the price suddenly dips to 17.5K. Of course, you have to have enough funds in an exchange to do it, but assuming that you do, well, you can just set it up this way. And then you can sort of combine the best of both worlds. You are DCAing into your position, but at the same time, if the market suddenly dips, well, you can still take advantage of it. So I hope this was helpful. If it was, please, like I said, hit the like button, subscribe to the channel. I'm always happy to have a chat about crypto or anything crypto, NFT, metaverse related. So please do comment on this video. And if you are interested, please do check out my course, Crypto Like a Pro. Thank you for watching and see you next time. Bye.